This is our Forex blog for June 4th, 2012. What we do most days, and this is step one of our trading system, use our currency meter to find the strongest currencies to buy and the weakest ones to sell. This is our new sortable currency meter, which takes these currency meter windows and overlays them onto blank chart windows. And you can see this blank chart window has subgroup A, as does all of the other real charts that get put on this. And so what that means is, because they're all linked to red, as is this little quote sheet here, when I sort them from strongest to weakest or weakest to strongest, you will see that they get put into the correct order. The Swiss is the strongest, then the Euro, then the Australian, and the weakest is the dollar, CAD, and the yen is the absolute weakest. The yen's going down over 100% of other currencies. Now, underneath our real-time histogram format, this histogram is made up of 5 of our best tools we've created over the last 6 years. 3 of them measure the direction the Swiss is moving. In other words, is the Swiss going up or down versus what percentage of currencies based on our statistical models. 2 of the 5 measure the intensity. One's a bar-by-bar intensity. How much, for example, is the Swiss going up or down on this 5-minute bar compared to the last 5-minute bars for this particular time of the day, average over the last 20 days. If during this 5-minute bar the Swiss yen or Euro Swiss normally moves 5 pips and today it moves 10, then that's 100% extra intensity. It's 200% intensity. So we average those together, and anytime you have a reading at and above the 80 level, it's extremely strong. Underneath that we have the 15-minute trend, hourly trend, daily, weekly, monthly. The more time frames that are up, the higher the chance of that currency continuing to go up. If the real-time trend's up and the 15-minute trend's up, but the hourly, daily, weekly is down, I don't care much about the monthly, you can kind of ignore that to keep it more simple, then the trend may be likely to continue another 30 minutes to maybe an hour and a half, but then the longer-term time frame's weakness should come back, and oftentimes comes back into effect. The Australian's a perfect example of that. Had a lot of strength today, but the daily trend, weekly and monthly was down. The daily switched up around 5:30 here. The weekly and monthly are still down, and down to this time. Today is one of those days where it's a counter trend day, and that trend continued. And when that happens, you can see a lot of strength right here. During the pullback phase, if you don't have much weakness, then the previous real-time momentum is likely to continue, which it does, and then the pullback phase has no strength, and so the trend continues. And here's the first time where there's really some intense weakness on that pullback. This may be the end of the move. So at that point, I'd be probably not wanting to continue to buy it, even though a little bit later some strength comes back in and we might have missed a trade. Trade what the statistics and our methods are most likely to give you. So today the yen was weak and started off with a weekly monthly trend that was up, and it actually remained up, but the weekly trend shifted to just barely up, and it's giving you the same continuation patterns. A lot of weakness, very little strength, a lot of weakness, very little strength. It's a no-brainer. And I leave these running to see the real-time tools. The euro really wasn't strong until about 8:30, but at 8:30 it would be a good one to buy versus the weakest Swiss, and the dollar was also weak throughout the day. So we'll look at euro-yen buys around 8:30. So here's 8:30, right around here. And notice our signals on the chart. The triangles are trend trades. The circles are counter trend trades. And this is still on beta. I have different color signals to let me know what the type of trade it is, and so I can very easily spot that particular pattern and try to get rid of some bad signals without getting rid of some good signals at the same time. That's what's very difficult about creating signals and also automated systems. If you see a bad trade that a human would never have taken, you can put in code that would remove that trade, but it also might remove more good trades. If you remove a trade that would have saved you 8 pips of losses, but it also gets rid of 50 pips of wins, then you're worse off. So that's the dilemma, and that's why I leave these running and try to tweak them on a daily basis. There are some signals and patterns that are on here that I have not released to our end users because I'm still testing. Ultimately, when I feel like this is more closer to being done, I'm going to have red signals for buy, green signals for buy, red signals for sell. And again, counter trends are circles, trends are triangles. But 8:30, you're looking for buys. You get into this trade right here. It didn't break out through our trailing stop, but if you got in when it went a pip above the high here, you can just keep moving your stop up. You might have lost about 8 pips here. You went long here again, 16, and you got out at 51. So you made 30-something pips. If you lose 8 and then you made 30, you're up 22 pips. And our upper containment bands are usually the end of the moves. I always recommend drawing fibs once the market moves up. A lot of times strong currencies will make one more move up, and usually it doesn't go beyond the 1.618, especially when it's above our white containment bands. The green bands, with the exception of last week, pretty much are a line in the sand. It might hit this level and even go 10 to 20 pips above that, then it comes crashing down. Last week was a rare exception to that point, but you can take this trade right here, have a small profit, pulls back again, you get in, and again, the fib targets are usually the end of the move. Now let's look at the euro versus the dollar. The dollar was also weak today. Right now it's the third weakest, but earlier today it was one of the stronger downtrends. So you were looking for buys in the euro dollar. This one right here went up. The pullback trade right here. Again, you buy it when it goes a pip above the high here at 33. Got you out up here at 87. It's almost a 50-plus pip move. And these gray levels, the dark gray levels, are Fibonacci profit target levels that I do each night for you. The light gray levels are Fibonacci retracement levels. We all know the euro dollar is in a downtrend, and so the fib retracement level is likely to be a resistance area. And Fibonacci profit target level as well off the previous wave up yesterday, or I'm sorry, Friday. I probably drew it from here to here, and that's probably where the fib target was. As we scroll over to the right, I hit the right arrow, you can see that this was the 1.618, and I expected that to be probably the high. This one I probably felt was too close, and that's why I didn't put it on there. It's also possible that I use this area from here instead, actually. Yeah, that's where I came up with that fib target. So I do these fibs each night so that you don't have to. I spend about 30-40 minutes every night drawing these very strong support resistance areas on here. And, you know, when it gets up to that level, especially because this one was very weak, the weekly and monthly trend was quite weak, good place to get out of the trade, and even look for counter trend trades if you're so disposed. Anytime you see it going up with a lot of strength, this pullback right here had quite a bit of weakness, and then the weakness kind of fell off right here. You might not have taken this buy right here, but seeing the weakness fall off, you might have, you know, bought the breakout right here at 87 and then got out when it got hit here at 99. That's 12 pip profit. 10 pips a day doubles your account every 2 months. 10 pips a day is 50 pips a week, 200 pips a month, 400 pips every 2 months. So 400 pips using very small 2% risk per trade. In other words, if you have a $2,000 account, you're risking $40 on the trade. If you have a 10 pip stop, basically you can do 4 mini lots. We have a position sizing software in here built-in because money management position sizing is key. You go to Trade Analyzer Planner, and we have videos on our site that show you how to do that. But the signals, you know, again, the 3 steps are: use the currency meter to find the ones that are strongest and weakest. You want to buy the strong versus the weak. You want to sell the weak versus the strong. The euro is always on the top of all the other pairs. The yen's always on the bottom. So if you have a weak yen, you're buying all the other stronger currencies versus it. You know, some pairs like the CAD are above the yen, but below the euro, below the pound, below the euro. You know. So step 1, use a currency meter, find the currencies to buy and sell, then wait for our signals, get in and use the trailing stops to get yourself out of them. Now the pound, let's bring up the pound dollar. You can see, you know, some signals here that, you know, weren't really the best. You can use these at and near fib targets. If you draw fibs on here and you see the 1.618 and you get short, guess what? You had a loss, but it goes above here. You get short again, you made, you know, 15 to 25 pips on the second trade. If you lose 8 pips and then make 15, guess what? You're up 7. This one went up without that much strength. The longer time frame trend is down. Sometimes you got to take a stab at these. You know, it comes down and goes sideways. There's not that much weakness. You bail on the trade. Maybe you even got this a break even, and then you made anywhere from 5 to 20 pips selling it. This is a perfect example why we use a currency meter. There really wasn't that much momentum. The pound, more than likely today, was week, as was the dollar. So you don't want to sell or buy two red ones or green ones together. You want to buy a green one versus a red one and sell a red one versus a green one. That's really about as simple as we can possibly make it. Exits, the third step of our system. Use the trailing stops, use Fibonacci profit targets, and use support resistance areas. Watch our classes, especially the ones on the pivots, Fibonacci's, Fibonacci profit targets, previous days, weeks, and months high and low, daily, weekly, and monthly pivots, and you'll have a great and very high probability exit system. Exits are key.